Friday's unemployment report was pretty strong. Another 372,000 Americans are working. The unemployment rate is still 3.6%. Everyone who wants a job has a job. You only have to ask friends who run businesses to know that hiring and keeping good people is hard. Airlines in Europe have had to cancel thousands of flights because they don't have enough qualified staff. Travel is bouncing back quite strongly from the COVID recession, especially international travel. I haven't been outside America for 3 years. As long as a negative COVID test was required to come back, I didn't want to risk being stranded out of the country. How do you ask a friend if you can stay a bit longer because you have COVID? But that requirement has thankfully been dropped. The economy is strong. Maybe I have a more positive outlook because the energy sector is having a good year. 2 years ago, the pipeline sector was one of the worst performers. It fell too far. Many big companies wound up beating 2020 earnings expectations that had been issued in late 2019 before we'd even heard of COVID. They've embraced financial discipline. They're spending less. They're raising dividends and buying back stock. So it makes sense that the pipeline sector is doing well. At SL Advisors, we invest in midstream energy infrastructure. That's pipeline storage and processing. We sit between the producers of oil and gas and the customers, which are often utilities, export terminals, or refineries. If you're interested in learning more about the energy sector and interest rates, then don't forget to subscribe and follow us on LinkedIn and Twitter. Our handles are in the description box below. Many people feel very negative about the future. In fact, there's a striking contrast between how households view their present condition and how they feel about the future. Stocks and bonds being down is certainly part of the problem. There's almost nowhere to hide. Inflation has raised the cost of fuel and groceries. There's a war going on in Europe, and senseless shootings seem to happen with all too tragic frequency. Another reason people are negative about the future is because they think the Fed is going to cause a recession. They already made one mistake by underestimating how high inflation would go. I can understand why markets and households think they'll follow up one mistake with the second one. Fed Chair Jay Powell is trying to reassure us that they won't raise rates too high.
We see it as appropriate to get policy rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So,
investors don't believe him. That's why stocks are down and the yield curve is flat. Both are reflecting some considerable risk that the Fed will overdo it. While that's certainly possible, we think that a second recession so soon after the last one will really hurt the Fed's credibility as a manager of our economy. For this reason, we think they will be extremely careful to avoid causing one. They may get it wrong, but they'll try very hard not to. So to the extent that markets are pricing in another policy error by the Fed, they're probably too bearish. We can all agree that today's 8% inflation is too high, but when it's 3%, will it really be worth trying to get it down to 2%? That's why, although inflation should come down, investors should be prepared for it to stay above the old 2% target for some time. 2 years ago, when the energy markets collapsed, my own investment portfolio, which is heavily weighted towards pipelines, took quite a hit. I tried to console myself with the thought that it was cheaper to fill up at the gas pump, although when I did the math, I figured it would take 2 trips to the moon and back before the savings on gasoline would make up for my investment losses. But I have no debt and I never had to sell anything. So now I'm the guy at the gas station cheering when it costs over $100 to fill up. High energy prices are good for energy investors. If you're worried about continued rising energy prices, you should buy some pipeline stocks as a hedge. We think they're a good investment. We manage investment products to profit from the outcomes I've discussed. To find out more about what we're thinking, sign up for our twice-weekly blog at sl-advisors.com. We always love to hear from you, so if you have any comments or blog ideas, please leave them down below. I'm Simon Lack. Thank you for watching this video.